Sunday, Sunday, December the 30th, 2012. My name is Michael Wright, and this is the weekend webinar. Just before we dive in, for those watching the recording, please do pause the video and read the disclaimer. For those who are here live with me, quickly scan over the disclaimer, and then we will start. Alrighty, let's dive first. Performance-wise, we ended off 2012, ending it off. We have one more day left, but it looks like posting our first down month, 12 for 13, giving us a 92% hit rate. So that bodes well. We are up over 3,500 pips for the year. Well, since inception. And inception was December 2012, so this time last year. So indeed, incredible run, and looking to increase that run as we continue forward into the new year. Just before we get started, I want to talk about certain improvements. We're looking to make certain changes into the new year. Again, you guys will all see this in an email by January 1st, more so by tomorrow. But certain things we're going to do. One thing in particular is that we are the technical analysis section. Okay, and let me go ahead and I'll pull that up for you guys. So one, we're looking to go ahead and change that into daily videos for each section. All right, for the most part, you guys know we look at three main styles, okay, moving averages, Ichimoku, and Elliott waves. I'll post my Elliott waves up shortly, but every day we are going to have a video for each section. So you guys can look over, see the different takes for the different analysis, and this actually supports our three-tier system, even the scope. So you see the scope of bullish and bearish developments, but going more in depth with that in a video versus having to only see a chart and then see a text. So it's more efficient on both hands to do that. So looking forward to that addition and change into the new year. At the same time, we are also more coverage by all of us in the chat room. We do a good job now, but diversify a little bit more, and then really aiming to increase education for all of you guys. And to a degree, we're going to change the chat room most likely, and we'll be more constructive with certain administrative parts. It doesn't bode well. Obviously, we know what we're trading. Just to only talk about our trades, it's fine if you're just following us, but to only mention, okay, it's pushing high, it's pushing lower, it just doesn't make sense. All right, so going to be a little more vocal in the chat room, at least on my take. So that, another change addition into the room, and watching that end. Educational stuff, we spoke about that. So again, our point is to make you guys more educated in terms of risk management, okay? Because at some point you are going to be down, you are going to have a bad week, whatever. But risk management is as key as anything else. If you're leveraging, you are just short-term, you're just providing a short-term point on your account, period. All right, so looking to get a little bit more on the education side. At the end of the day, you guys will always take on your side, okay? And the fundamental wise, we do a good job now, but looking to get a little more aggressive on the fundamental end as well. So you guys will see that. Now, all of these different takes, we're not just, obviously, signals are a big point of our service, but we provide everything across the board. So that's why we don't veer away from the trade copier, but it's just not our main focus, okay? Something we are looking into possibly, but again, you guys have to understand, for us, our big picture outlook is a hedge fund, okay? And the hedge fund, to have a trade copier, it doesn't make sense to do both. If we were only staying in the website realm, right, then it would make sense, because we're only doing that. But that's not our big picture outlook. We are always going to be here for Global FX Club, but you guys have to understand the big picture for us is a fund, okay? So that's still something that's debatable. Speaking to lawyers on that end. Again, we're not here for the next couple months, all right? We're here to stay. We're here for the long haul. So we're just not going to make moves to make a move. It has to be an educated and a move that makes sense on our end, okay? So that's enough of that. The IB part, looking to bring that to life somewhere around February, March, being that we all trade under one broker, and we could talk about brokers. I know right now, sometimes you guys ask me what broker am I using. I'm always hesitant to release that because I'm not getting paid to be a sponsor for a broker right now, okay? So it just doesn't make sense for me to do that at this moment when we are talking to other brokers, all right? So I'm not hiding it. It's just on a business end doesn't make sense, okay? So hopefully I don't get that question too many times more. We're working on it, so you don't have to ask because we are working on it, all right? Aside from that, White Confidence will obviously stay. Those who are on it, obviously, you guys know that. On our part, not everybody is a part of Right Confidence. So if you have it, you have it. You don't, you don't. And looking to provide more initiatives in terms of you sign somebody up, you get a free month. Just more initiatives, more membership discounts. We started doing some things last month, but looking to release more ends of that. Even maybe taking additional time over the weekend and doing more educated pieces separate from our coaching. We obviously still have coaching and looking to get more aggressive on the marketing end with that as well. All right, so a couple notes there. And trading wise, we're just going to trade the same and looking forward to that note as well. All right, does anybody have any questions on anything I just said about that in terms of the outlook for 013? Make sense? Feel free to ask questions now. I know sometimes, for some odd reason, I get the same people in here and also in the chat room that are quiet here and then become somebody else in the chat room. It's pretty funny, in my opinion. Don't be shy, guys, just because you hear my voice now. All right? I agree. All right, so let's dive into the markets. Let's look at this week's update and then take it from there. Dollar CAD, that's what we have up now. We have Dollar CAD up now. One area specifically, so was looking to short it. I probably won't. I'll probably just stay pat. We're in 2 open trades right now. I do like a Dollar CAD short, and oh yes, good point, Randall. Randall says, "Well, I suggest more scalp trades in the chat room." Now this is the problem, okay? We are looking to do that, but we may do that in a webinar type of kind of basically opening up a webinar and doing it in there because we tried that in the past, okay? The scalp trades, and then it's too fast, right? It's too fast to send it out across the board, right? So right now, a lot of members do catch it, but then you have the sporadic members who maybe wait half an hour later. They're busy. They're doing other things. So then they say they missed a trade, okay? Obviously, that's not. We did our part. We sent it out, right? If you miss it, you miss it. Then they worry about jumping in too late, whatever. There's that whole other realm that comes with signals, right? So we dealt away with it because we realized we can't really post that on our performance because it's too fast. It's scalp. So what we're gonna do, open up a webinar and do scalp trades, okay? All right, we're gonna open up, and yes, George, we do know about the SMS. We are working on that. Trust me, guys, we know about everything. All right, we do. I definitely thank you for the recommendation, though. But we 100% know about all these different features. Again, there's a lot. Obviously, there's a lot. We gotta take it in stride. All right, focus. You gotta focus and add things accordingly. All right. But in any case, though. Now with the webinar, we can scalp with the webinar, we can scalp with you guys, but obviously we cannot put that on our performance. All right, so it's that balance now. Why can't we put that on the performance? Because not everybody's going to be able to get in and out, right? You're not going to be able to get in, not able to get out. But for those who are around at that time, you could benefit off of that. And obviously, it will be more of a short-term movement, percentages broken half, and we'll be trading live with you guys. So indeed, that is something we are going to start doing in the near future. So keep notice of that. But also, again, will not be part of our performance in terms of posting it because it's a scalp. But everything else is going to be the same. All right. Corinne says, Michael, will the market close early tomorrow? I believe so. Again, depending on your broker, they may not even open up. Every broker is different, but I believe so. I know stock market's closing New Year's, so we'll see how the FX market does. So watch out for that. I haven't gotten any alerts from my broker yet, so we'll see. All right, but indeed, Randall, I'll look to do more scalps, and even if we don't do it, we'll hit certain things like big time resistance here against this level for swings here. All right, so it's not really a recommendation, but it's not really with taking that trade, but you get the gist. All right, Liam and Chris both do good jobs at that now, so that's one thing we do have noted for the new year. Okay. Now let's get back to the markets. Dollar CAD. Yeah, I do like dollar CAD to the downside. Literally against this level. I was looking at that. Probably again, I probably won't pull it just because I'll two open trades. This may be something into the new year. We'll see if it does break support and I could get to break even on one or both of Aussie or Kiwi, then I will take that. But again, I'm looking top against the 61A fib on that recent downswing. Also, something else worth noting for the dollar specifically is this descending trend line. Right, you see that from the 725 2012 high. So right up against there. The future cloud is still bearish. Now, one thing you'll notice is, though I think a pullback is on the horizon, that still possible for a bounce. All right, we have bottom side support, and then this count will begin to come to life. Right, somewhere in the 98.80 area. That's the 4-hour trend line, well, daily trend line. This would be an A. I'm looking for a B move, and then a C back to the top side. All right, could possibly, if we hold this sort of movement, then the first ideal targets are A equals C. So just a little bit around parity, and we'll see how that comes together, right? Away from that, looking at Aussie dollar, okay? Aussie dollar, we're still in this trade. Right now, according to my pre-market quote, it is trading at 103.64, so a little bit of a gap down. Gonna leave stops as is, 103.50. Looking for 104.40 area. Again, that's about 70 pips to the top side. All right, 70 pips to the top side here. Then looking for, that's also just around that 38.2 area, okay, and also a retest of that fib top side. So the ideal path, we will be looking to go short around that area, and then looking for a bigger move lower. One thing I've noticed is, in my opinion, this move and risk off is just not done. Doesn't make sense to be done yet. This extension, all right, this was swift, very swift. So I don't even rule out a bigger consolidating part before a topside break. If we break lower, it will be interesting, but watch out for consolidation, breaking apart, and then finally getting some legs, and then a bigger move lower, okay? The same thing goes for the Kiwi dollar. The Kiwi dollar, again, we are seeing this 4-hour trendline support, so it makes sense to hold here, provide a short-term bounce, but the bigger move still to the downside. If you look at the Ichimoku base for, let's start off on the Aussie, we see that taking Kijin cross to the downside already, okay? This is a bearish development, all right? Now, this is one thing about Ichimoku that me specifically I don't like, the big lag, all right? Because ideally you see this cross now, you probably got short on Thursday, but it's due for a bounce. So matching up that Elliott wave with the Aussie, if it does really hold true, then that bounce will then lead us back towards the Tinkin on the Ichimoku, providing a better risk to reward short against that 105, and then looking for a bigger move to the downside. All right, that's what we're looking at here. I can provide base so you guys get an understanding. And this is one thing we try to do with the coaching students is planning. All right, because at the moment, you just have to pull it and go. So here, you see how the follow through happened on each cross, right? So same play. Look for the same play, and then here you probably got short on this cross, maybe down here, but you see how it pulled up. So the better risk reward was here, and then the last one at the Keynesian. So we're looking to do the same thing. Okay, looking to do the same thing here on the Aussie specifically. Same thing goes for the Kiwi. Spoke about that and on the Elliott wave, on the Ichimoku. Ideally, that pullback, then look at to sell it again. If you look at the weekly developments, same idea. The Tenkin not too far above, so looking for that same play. All right. We take a look at the dollar CAD on Ichimoku. So future cause bearish. Watch out for the thinness of the cloud because it attracts price action. So see that here, it just attracts it. We see that a lot more on the faces, but ideally same idea. And then we need to see the Tenkin cross above the Keynesian to provide a bigger base on upside risk. All right. Meanwhile, the dollar Singapore for $1, very interesting. Actually, not. Probably better to watch paint dry than this pair right now. It's capped by this 4-hour trend line resistance. Hasn't been doing much. For those who've been around for quite some time, you guys know at one point I was all over the dollar Singapore dollar because it was clearer than the dollar index itself. That has broken apart for now, being because we see the dollar index get some legs and everything's been very choppy. This December it was interesting to a degree, but not really because it was choppy all over the place, back and forth. And then when we finally got movement, it was swift. Usually, and yeah, on average, you see fluctuation, right? Like let's use odds as an example from the past. See, you see fluctuations like these moves. Even at support, it will bounce strongly off of it. We could contribute it to the holiday season. We could make up all these different excuses. But just on the average, just looking at price action, you see the movements, right? Euro dollar, very erratic. But the same idea still. You'll see breakouts and then start to trend, right? So this month was pretty interesting in that even sentiment broke, right? Euro dollar, if you look at that top edge here, right, how it's holding, Aussie dollar is obviously on the opposite end. Downside, Aussie to the upside, whatever. So then we have this Euro Aussie. Okay, now Euro Aussie, I still like shorts. Probably, if I do take a trade, I'd rather Euro Aussie just because it has a lot more downside in my opinion. Could provide some good risk to reward, and I may pull that somewhere near the open with movements towards 126. See, so I do like 130 pip sell off, right? And that's what we're looking at, 130 pip sell off. And I even think that the Euro Aussie even gap up a little bit. It's currently trading at 127.41, so a little 5 pip gap to the top side right now. If I shorten up that time period on the Euro Aussie, right? So just it's still below that neckline. You could kind of call this hourly head and shoulders. I'll be a little cautious of that, but even besides that point, we still have a basic retest price action wise. You see we broke out and now we're basically retesting. So good area of 41.81 stop, so a tad bit above this trend line and that neckline. So still like those shorts, and then moves towards 126. All right, so that makes sense here. ABWX, then still looking for a Y, and then even this is a AB pull up, then still downside still preferred. All right. the pull up just around the 61.8 fib. So it makes sense on a lot of other degrees. 81 obviously would be above this fib here, but if it breaks above, I may scratch that for a small loss. Now, when I say small losses, I think some people get the verbiage confused. Small loss like 20 pips versus the full 40 pips. All right, I didn't get stopped out for the whole amount. I just closed it out. All right, but that's why something like if you're a trader, you're a trader. I pulled a lot of trades in December as we were chopping, so losses could have been actually a whole lot greater. But one thing on your Aussie that I saw that we didn't do was this trend line, because we shorted up here, and then even on the chart, let me see if I can find it. Even on the chart, and I saw it, I just didn't think we were really going to bounce that strongly off of it. But let me show you the before and after your Aussie specifically, because we could have played both sides and then still been back in right now. Um, Here, so this is a Euro Aussie when we first took the short, 127.70. So that 127 mark, or even below it, I had that trend line right there. So probably could have booked those profits. We could probably booked 90 pips just by playing off of that support line and then get a long, and then booked another 50 pips to the top side. Part of the game, the divergence still holds on this end, so the movement is still unchanged. Buy is still unchanged. So yeah, probably we'll re-enter those positions with 81 stops and looking for that same play. Okay. So that's an interesting note on that. Um, George says, "Can Euro extras be more aggressive than Euro dollar?" Well, for that, we just look at Aussie Kiwi. All right, because you're playing which one is better than the other. Uh, Triangle developing, much for the breakout. Usually, when triangles happen, is a continuation move. Uh, okay, so rather shorts up top 127.20. So this means that the Aussie will be stronger than the Kiwi. So your Aussie shorts make more sense than your Kiwi once you analyze Aussie Kiwi cross. All right, makes sense, George. But breakout will provide more clearance. Obviously, this is a bias because I'm looking for that continuation. But if we break to the downside, then ideally the opposite holds. Makes sense. All right. Everybody with me so far? So I'm probably just gonna stay pat with the two trades we're in, and the only new trade I'll take is Euro Aussie. I do like Aussie dollar CAD though, right up against that. Looking for this play. I do like this play. So below 99.40 will make more sense because that'll be confirmation. So right now you'll just be top picking, but obviously top picking provides that risk to reward, because sometimes, well, not sometimes, most times what happens is that we spike below here, and then you're either waiting for a retest or you miss the trade. So that's why I top pick for the most part. A lot of people ask me, most of my trades are against the trend. It has been for 13 months. Obviously, when it's going against me, then he has something to say, but then I've always traded like that. All right? So, and the reason for that is because it provides that risk to what I'm looking for. Okay, anything else is lagging. And I trust and believe my performance will not be the same. Okay? On that note, anybody have any questions for me about the couple trades we looked at? You want me to look at any other trades? You want to chat about the service? Any mentions there? Concerns? Hello, Camille. Anybody have any questions? No? I'm also interested to see how these yen pairs actually play out too. We're gonna talk about yen pairs. Um, I'm not gonna trade any of them. I'm just gonna watch for now. Only way is if I do want to see what Aussie yen is at when Aussie dollar. If Aussie dollar plays itself, how we think will play itself, then it'll be a bigger fade. Um, I'm just looking to fade these yens. There's a gap here, but Euro Yen has two big gaps that I'm eyeing, and could really start getting down whenever it makes up its mind. We have gaps at 111.78, and then another gap at 109.73. So that's almost about, well, that is about a 400 pip decline from our current price action. I'm not ruling out another spike, right? Because that's what it looks like looking at the overall market. One more risk rally. 117 I think is too aggressive, but we could tap just around 116. We could tap around there, even just post new highs to 115. At that time, just look across the board. On a weekly note, this is massive, very big. I rather, and this is my old team trade. I'll post this also for the public to see. And for this one, I'll write about it. But I think this would be the biggest change to 103. That's about 1,000 pip decline. But yeah, looking for I'm just looking for a full retest and 150. It, uh, you guys hear me now? Can you guys hear me now? All right, perfect. Uh, but what I was saying was, I'm looking for your yen is my big trade for the year, 013. Possibly could go probably 6 months or so. But I'm looking for a full retest, like we were speaking of those two gaps for the euro yen, 111 and then 109ish. Okay. Um, but again, uh, again that full retest here. Uh, it's the top edge. Take off these retracement. Alright, see, I'm still. So the top is coming near, in my viewpoint. See, once 117 is pretty high. Could get there again. Even if I miss, see, this makes more sense. 116.30, 50% fib here. Or even do a 5-wave 1-2. Yeah. Move. Okay. 116.30, we get there. I will look to top pick it. I will start looking for some divergence at the top. We're beginning to see it. A little more fluctuations could provide a massive swing higher. So for those long-term traders, keep your eyes on this euro yen. And then even if not 150, first targets could be 130. Yeah. Actually, one, yeah, one. Let's go for 135. 138 could happen, but I'll throw away 300 pips if we could bottom pick it around 102 for moves towards 135. That would give us the 161. Depending on how fast we get there, the faster we get to 125, the more likely it is 35. Just because we need that more time, right? And when I say time, I mean you see the time it took for it to get from 140 to, let's say, uh, 93. We're looking at about 2 years. Okay, so I would expect almost probably not the same time period, maybe a year to get there. All right, so 100 could be a good buy, and just sit and hold for 135 against 97. So 300 pip stop about. That's massive moves, and this is something else that we're gonna do more of. Like, like people don't understand like what I pull on the Global FX Club is only a portion of how I trade. I could give you guys a little insight on how we trade. Uh, Diversification is key, even in trading. So here we have 1 hour strategies. But so if you draw a pie, right, and I think I was talking to one of my coaching students about this other day. 25, I suppose. See, on 100K, for example, right? 25 times. So one would be hourly strategies, another one would be 4 hour strategies, another one would be how we trade here, like Elliott's for the most part, whatever we pull here, whatever, and then another one will be that last pile we'll cut in half and do scout for one, and then the other half for daily setups. All right, so there's even diversification in that. Why don't we trade like this for you guys? A lot of different type of traders that we have to cater to. To trade like that will uh, fully, it won't veer anybody off, but it's just too much questions will come with all of those things that only people with a lot of experience will understand. So we keep it aside. Okay. But in any case, back to that point, you're looking at it. We'll try to top pick it near one. If we get to 116, we'll top pick it. We'll like to see where everything else is at, and then look for swings lower, and then the top swings to the top side. All right. Ideally, same thing all hours. We'll see. Ozzy and a good buy for Moose Higher. Sound is, man, what's going on? Well, good thing we're almost done here. I'll look into that, make sure we're good for next time. You have any questions? You guys can hear me now, though, right? All right. All right. So you guys answer the questions. The hear me now, but no questions, I guess. Um. So yeah, let's wrap. Now. Okay. Yeah. Well, like for example, George. Yeah, I'll share them. Oh, and this is something else I'm going to do more of is see, because the reason for these long-term trades is that they take wide stops. Okay, they take wider stops. The reason why I don't take it, I don't post it, because then I gotta really break down in terms of I do trade like this, but the average person, 150 pip stop, 200 pips, they don't. There's no way you have the same leverage on that big of a stop than you do on a regular trade. Do you get what I'm saying? So now I have to now break down and say take a lower leverage, and then you're gonna ask me how much leverage should I take. It just time is very limited, and to do that with each person doesn't make sense in my opinion. So that's why I don't tend to do it. But in the videos, I always give my analysis on long-term setups. I just don't tell you or share that part. Well, yeah, because if I say that, then you're gonna expect me to post it on my performance, right? So that's why. But, but I will always go, like I have and always will go over it with the videos, and that's one thing I don't think a lot of members really take advantage of are our technical analysis, because obviously we trade our technical analysis. I don't think people really understand that, but that's why we're doing more of these videos. So hopefully, it's of more use, etc., across the board. Okay. George says it's very hard to take the Sunday night trades you suggest. Hey, we trading FX, man. This is a 24-hour market for a reason. So then you don't have to take it. The George says because the spreads are high, then don't take it. You could wait until later. That's fine. At the end of the day, we're showing what we're doing. It's up to you if you're gonna take it or not. If you're gonna wait, that's up to you. All right. So let's wrap this up, guys. Always a pleasure talking to you all. Um, Happy New Year for those who are celebrating. Looking forward to the 2013. I'm going to send out an email to all you guys talking about some of our updates for the new year. Feel free to always reach out to me. I'm usually always on Skype. Email, my personal email is mwright@rightinv.com. Our general one is trade@rightinv. So again, you guys basically have access to 24 hours, so don't shy away from that. And yeah, really looking forward to a prosperous new year. All right, guys. Again, only trade we like that I may take is Euro Aussie. If I don't, then I don't, because it's two open trades. So we'll see. All right, guys. Again, David says he started celebrating his new year. Celebrating New Year's already. You're the man, David. You're the man. I'm pretty sure. Well, we'll speak after this, David. Anyway. All right, guys. Cheers and enjoy.